Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi everyone, today's Monday, June the 30th. I actually thought the 30th would be yesterday, so today is actually the last day of the trading month, the last day of the trading quarter, and we head into a 4-day week that should have a fair bit of volatility. I've noticed across the chains, volatility is expanded. So here we go. It is the Moneyball Morning Report, and my name is Anne-Marie Band. I have moved off a lot of the indicators this morning. I just want us to take a look at how much price action is really solidly bullish across big time frames. And I'll explain these zigzaggedy things in a bit. Big time frames, momentum is up, trend is up, all-time highs, and although the prior months of March and April were bearish, and these bullish months have lower volume, that is a little bit of a warning sign. What we do see is the potential of pressing even higher before the price action comes back. But it is going to come back, because if these folks that put up 3 big months of downward flow have had their hands under their butts waiting for price action to reverse, there's going to be a point where they either puke it up and have to cover their shorts, meaning they have to buy into the market, which will make the market go higher, and then we fade, or they gain control and we come back in and pull back just a little bit. So big moves upward, very, very big moves upward. Very heavy congestion for 4 months, right at around 60, something like that, and 60.80, somewhere around there. Very, very noisy. But then we have another number at 61.50 that you'll see has been pretty important. 61.60, 61.50. All right. Again, weekly, very strong. Daily, very strong. Just solid upward flow. All right. Let me describe what instruments I have here. Of course, I have my momentum indicators. And let me see if this works like... Oops, no. Doesn't do it. Okay. So let me see what we can do about sharing what's going on. This, of course, is the VWAP. It's flat. We're above the opening ranges. Let's talk about expected moves. For the daily expected move, 6,254, top end, we're almost there. Low edge of the expected move, 61.93, pretty far below us. Opening range event, low, 6,223. That's a really big number. It's been repeated a lot intraday. And the high, 62.43. So we've got ourselves about a 20-ish point move. Not dramatic, but much bigger than Friday's. What do we want to look for? We want to make sure that we are making higher lows and higher highs. And right now we are in inventory accumulation. You see it? We broke out. And now inventory is being collected near the high of the opening range. And the high as expected by the daily expected move. So we're either going to break out and distribute at a profit, or break down and distribute at a discount, assuming everyone's been buying. All right, but of course we know it's both of that. My suspicion, because the moving average is somewhat flat, is that this is a good place to initiate a little bit of a short, not a lot of risk, right at the top edge of that range. Let's see what we might see here. Yeah, top edge of the range. We'll see what goes on. This expected move has widened a little bit in the overnight. Okay, so could you take a short there? Yes, but it would have to be a counter trend short, and you'd have to put it on a very tight time frame. Okay, dips or buys. Now let me talk about this blue line. This is the super trend line, and the way it works is the following. I wish it had the different ways to distribute the line in terms of, you know, whether we could have the steps or the diamonds. The diamonds work very, very nicely, as we saw on Top Step X. But what this tells you is the relative trend and what the relative support levels are if the chart is to stay long. And you can see that blue line is right at the top of the expected move. If you want to go long, That'd be the first place to go because the risk is fairly small. If it loses that edge, the next line of the expected support is probably going to be somewhere around 62.35 or the midpoint at 6,233, the midpoint of the opening range. All right, let's go to the NQ. Again, if we take a look at the monthly chart, very bullish, huge move upside. Heavy congestion on the monthlies, somewhere around 22,100. As soon as it broke that, literally, they were off to the races. Let me remove that line, and we'll leave it as it goes. I mean, this is really, the breakaway area was literally as soon as the month began. It's just a clean move with hardly any downside flow at all. Weekly charts. Last week, we had a big bounce. Tech, going to be a big thing. Week before last. And then, no, that was last week, yes. And now we've got upside motion. Price action looks very bullish. Trend and momentum also very high. Let's go straight to the 1 hour. What are we taking a look at? Opening range. Low, 22,751. High, 22,842. Where are we? Right at the top of the daily expected move. That's 22,892. The low of the expected move on the daily, 22,616. Weekly expected move high, 23,060, 61. Low of the expected move on the weekly, 22,451. Look at momentum, trending. Absolutely trending. So, again, upside. Where's super trend? Sitting right under the VWAP. I suspect 22,837 is the bounce that gives us further upside. If we lose that, let's do a Fibonacci. If we do that, the midpoint of the opening range is 22,789. Underneath there, we'll track lower. The highest volume candlestick of the week was a buy candle at 3 p.m. That, this might have been the Canada tax news, and then it completely reversed because of, I don't have any idea. Maybe the shorts wanting to cover. They really are upside down, and they continue to try to short the tops. It's just not a good idea right now. VWAP up, trend up, momentum up. Dips are buy zones, folks. And you can measure the dip by how, if we lose the opening range high, only give yourself a little bit of room for a stop. You can always re-enter, right? Just plan your entry smart, right? Plan your entry smart. I like the high of this candlestick here at 3 o'clock as a good buy zone, 22,760. Let's go to the YM. This is my 4th attempt at recording today. It's just been crazy. All right, here we go for the YM. Looking at the month. Has not reached all-time highs. That's interesting, right? I think that's very interesting. Volatility showing that the upper edge of the move easily around 45,000, but is the YM catching up, or is it telling us something that we need to know? We can't know until after the fact, right? We can't know. Volume for these 2 months has been literally half the size of the selling months, and so they've got to do quite a bit of recovery for that to really hold itself together. Heavy congestion sitting. I think we ought to have a line. That's also heavy congestion. I'm going to borrow this line here, and I'm going to put it at the top of the heavy congestion zones. No, I'm going to put it here, where it crosses all of these candlesticks. 44,786. All right, let's go to the daily opening range. Low of the opening range, 44,201. High of the opening range, 44,356. We broke to the top of it. Notice what the super trend is saying. Trend is still up. So when the super trend is here, it's telling you there's resistance above that is likely to hold just so long as we don't break the high, right? So legitimately, we could look at this and say, I'm going to borrow this line again. We could say, hey, a buy stop above 44,438 tells us that the movement has resolved to the north. What I like to do, of course, as you know, draw Fibonacci from the high of the opening range to the low and look at the midline. That's going to give us 44,279. That would be the number that I would be looking for a buy zone. Dips are certainly buys, right? But we really have got to pay attention to what's going on here. We don't necessarily want to go long without immediately making sure that our risk is covered. Now, we are making higher lows under here. That's a good thing, but momentum is telling us that those higher lows are moving up on shallower volume, so they could double bottom before they rise to the top. Upper edge of the expected move in the YM, very far away, 45,567. Lower edge of the expected move, and this is for into September, 42,837. So very, very wide. Let's take a look at micro Bitcoin. Okay, monthly chart. Bullish. It broke the high in May, but has not retested that high since. So it's an inside candlestick here. That means it's unresolved. So where would the actual big trading go on? I would say the break of this candlestick motion at the low of that expected move, the low of the month. If it breaks there, traders are likely to try and buy, but if they can't, they'll slip into the next box below at 94,000 and change. I'm not sure what I did there. All right, let's go all the way to the hourly chart, see what's going on. Super trend mixed, but let's look at the opening range low, 108,245, high, 108,950. You might say, why are you giving me these numbers? Because they're areas that you can buy and sell. If you're bullish and you think, hey, I'm going to hold the low of this candlestick or the high of this bearish candlestick, if the bulls are going to hold tight, then I'm going to watch it bounce off of that level, get back into my opening range, and I can buy it, right? So that low of the opening range gives you a long. We could go into the high of the opening range. To me, this is a no-fly zone here, right? I am below the VWAP. I have a mixed super trend. My momentum is down. I would not be surprised to see it come into either of these boxes where we have a ton of volume. So I'm waiting for the edges where price action will move, and that's how I'm going to run this one. Okay? Expected move for the day. Low of the expected move daily, 107,270. High of the expected move, 109,246 on the day. For the week, it's expanded. Low, 104,880. High, 111,706. And that would break the high that we are currently seeing in Bitcoin. Overall, this formation is incredibly sideways. See the edge here? This was a buying candlestick, and they have literally bought the bottom and sold the top, tried to move out and up, and instead have come back to test it. Could you say, yes, I'm going to buy it? Absolutely. Just remember, you're under the VWAP, under negative momentum, and so it's going to take a lot of power to push it forward. So you might try a limited long that gets you into the range. You take some profit. It comes back, prints another higher low, and then Bob's your uncle. Right? So that's what we're staring down for Bitcoin. Let's go to copper. Copper futures. Again, Dr. Copper, supposed to be the storyboard here. Copper not at all-time highs, but in a very solid space. There's a lot of buying above that $4.68. You know I'm looking for $4.80. Literally, though, this candlestick that we positioned in April, we're still inside of this range. If we break to the north of 520, there's going to be buying, and copper will see highs it has not seen in a long time. If we do not, we're going to fall back into the range. My suspicion is that we retrace the candlestick formation, but I don't know. It could be different. Let's go straight to the 1 hour here. Let me make sure I'm on the right contract, if you don't mind. Check one of my other platforms. Oh, gee willikers. Let's see if we're at the 1. Nope. I did not even patch this on 3. Yep, that's where it's sitting, on 3. So this is the contract for copper. The numbers I have on 2. So shift the price action. Let's see how much we have to shift the price action. 2 pennies. 2 pennies to shift the price action here. Opening range high. Opening range low. We are underneath that opening range. Things are very sideways. As I mentioned, I think we fade here in copper. Remember, copper is very hard to trade from this. Why does this not have any of my numbers? That is bizarre. No, it actually does. Here we go. This one, we have to move 6 cents, but the numbers are going to be the same. 544 and 480. Very sideways. For me, I'm looking for a buy stop above $5.18 and a sell stop below $4.88 that take me down into 480. So that's what I'm staring down right now in copper. Let's look at nat gas. Nat gas also being very erratic. Holy cow, what an erratic chart. Continually retracing. Absolutely crazy. This movement, it has been incredibly wild. But super sideways and holding a very big range. 2 months sitting inside of the candlestick formed in April. Looks a lot like copper. I mean, it looks a lot like copper to me. This would tell me that I have congestion to the north at $4.17 and support to the south at $3.04. Just very trapped. And you can see, look at that, right? I mean, we drew this. Could this be a bear flag? Yes. Could it be a flag that ends up breaking to the north because it comes back and holds a higher low? Yes. The storyboard is, don't trade it unless you are absolutely sitting inside of these big boxes of price action and the prices have shown us support. So what do I like? 350. Look for the buying pressure here. That's the close of the VWAP of Thursday. That looks pretty good. Otherwise, we may easily head to the bottom of the box at $3.43. Very, very wide range also. Opening range high, $3.73. Opening range low, $3.66. But you can also see, that super trend is telling you the bounces are sell zones. And you can go to the test of the super trend to take that short down into the area, knowing that it could easily come and kiss that VWAP, right? Momentum, very negative. That's just trending momentum. So wait for heavy congestion, and that's where you'll see your buy zone. Let's go to oil. I feel like I've been talking for 3 hours. Okay, so oil, let's go to the monthly. Oil, that's a downward trend. That's very interesting. For some reason, I felt it would not quite look so downward sloping, but indeed it is. Very, very interesting. All right, so what do we think here? Well, I think this chart is actually going to bottom and it's going to start moving a fair bit, but before that, price action has to tell us that that's a possibility. And so far, all we've done is bounce into resistance and sell off. Now, we are sitting above old monthly support, and this month's candlestick is outside of the range of April's candlestick. So it looks quite different to the other commodities that we are staring down. And that's important. We've been sitting 1, 2, 3, 4, 5 days inside of a range that's about $1.20 wide. To me, that says it's setting up for another substantial move. What's the trade? Short below 64.50, long above 65.90. And it would be better to have a look above and go rather than a look above and fail. We don't want it to fail there. If it looks above and it comes back and it holds again, we'll have a movement upward, and the look below and a failure to get back in the box would give us much better motion to the downside. Look at all of this selling volume over the last several days. It's been quite monumental. So right now, we sit in a range that is, as I mentioned, 1, 2, 3, 4, 5 days wide, counting today. Top of the box, probably a sell zone until it isn't. I know you're like, thanks, Captain Obvious, appreciate you. That's really what we have to think about. Until momentum really begins to hold the pressure event and we start getting some trend in our super trend formation, it's simply telling us sell the top and buy the bottom. Opening range for oil, low $64.73, high $65.20. I still like this area at 64.50 for the potential long, though it might not come in and give us that extra 20 cents we might be looking for. Top of the opening range has been holding very nicely, right? It's been holding very nicely and trend is moving, so pull back into 65.20 could give us upside pressure. Weekly expected move, high $67.26. Weekly expected move low, $63.07. And in the meantime, we stay trapped between the expected moves of today. Let's go to gold. Wow. Okay, so I got to double check that. I don't think that number's right either. Expected move 30 to 36 30 oopsie 32 36. Okay, that makes more sense. All right, there's 32.36, upside pressure. $33. $60. Huh. That's very interesting. Okay, 33.20. All right. Wow, these numbers disappeared on me. That's so crazy. 64. All right, pardon the interruption right there. Okay, so that's what we're staring down. This is absolutely bonkers. Did I move this to the wrong 30? Oh, you know what? There we go. That's why it looks like that. All right. Here we are. Opening range. Look at the size of this opening range gold candle. That's insane. Low, $3,250. High, $3,293. So what did we do? We held around and about the midline. Let me draw Fibonacci from high to low because this is so big. Right at the midline. That's great. That is that's good enough. We held that midline and bounced. That's 3,273. The low move of the day from that open is 3,267. The high of the expected move on the day, 3,303. We already broke through it. Pretty interesting that we've already expanded outside of the upper range, but I think a lot of these traders are just caught in the slosh. If you remember from last night's video, what gold is sitting in is a very big, fat, ugly range from a long time, right? Do you see this? That's what this chart is sorting through. The bears waiting to test those lower highs, and the bulls trying to buy everything back at the lower lows. And they are not doing a hot job of that, just saying. We keep breaking. They're clearly not in trend with the rest of the market as they buy those dips, right? It's just not what they're looking for. All right, so let's go to the hourly. Very sideways. You're going to watch spikes into the upward edges to take a short. Right now, look at how mixed the trend is, right? That's because my super trend reading is 7 and 1. You could widen it if you're looking for something that looks a little bit different, right? You could say, hey, I want my super trend to have a multiplier of 2, and you'll see it widen, right? Give you less wiggles. For me, I like the 1 because I'm intraday trading and I want to see what the price action is doing for me in short order. So I like it a little tight because I'm watching things a little bit closer. So you can do it and have it wider. It's totally up to you. Totally up to you. All right. So what's the trade? Dips or buys, as long as we do not lose 3,267. That implies that the buy zone doesn't need to be until we get to 3,267 or thereabouts. We're trapped in the range. I suspect any big bounces into 3318, maybe Friday's closing VWAP 3328. That's where I would short. Otherwise, I'm just going to stay out of this one. I really am. I'm going to stay out of this one and let it do its thing. I moved it to 2 so that we could look at SPY and the Qs and make it fairly clean. Have a look. Big gap up in the SPY. Opening range. Low 612.95. High 613.64. Still, it's above the opening range high, but now has pulled back into the middle of the opening range. You can see there's a super trend support line right there that's telling you, hey, if you felt like it, you certainly could buy there, but the real stop isn't until the high of this region at $615. Low of the daily expected move, $613.79. High of the expected move, $620.50. Ranges have expanded to the upside, of course, and to the downside. Very, very big motion there. Dips are clearly buys. Every dip, momentum gets lifted. It's the same. I think this week could be fairly volatile, but I had hoped for mean reversion, and it is not. It is climbing hot. And if it continues to climb hot, we better be quick or we're going to be dead. I'm telling you, these markets collapse on a whim when we run straight up. We just have to be very cognizant of what price action is doing if we're trading intraday on the hourly formations. Okay. Wow, is that a wick? Yeah, that's a terrible looking candle. All right. So, low of the expected move for the Qs, $550.93. High, $551.74. We moved above it and we moved below it. This looks like a pretty nice buy zone because it's right at the bottom of the expected move on the day. The expected move on the day is $548.26. It's sitting at $547.75. So that could be a nice bounce. And I think it actually already did bounce. That's where they took it. Now, if we are to stare down what the high of the expected move is at $554, it looks very doable, right? Dips are buy zones. Notice what the Qs have done. They've retraced every wave to significant amounts. It looks like 61.8. And so the rise up expect a flattening out across the board that pulls back and gives you higher support. All right, folks, sorry I talked so long, but I'll see you on the streams. Midday Money Ball. Take care.